As we can see how the weekly trend is upward, I can buy and set the stop loss below here, and I can say I will buy because of this square right here, and I can call it order block sopa de caracol.
You be pa ti, you be pa me.
What is the smart money concept or institutional trading? It is finally the greatest discoveries in trading, or like any other method in the past, is nothing more than the popular ideology of the moment that keeps distracting you by blinding you from the simplicity of trading and from the real and simple business model of the banking institutions. In the next part of the video, I will show you about the dynamic we help traders to use when they train with FX Logos Trading with Logic. So they develop the skill to increase a small account of trading because they become free from the complex and subjective ideas from smart money like liquidity zones, order blocks, imbalances, structure, and all that inflationary information that you continue to consume, studying, trying to understand, watching dozens of videos everywhere from different people, all with different opinions, like trying to join the correct religion. This video, my objective is that you realize that if you understand the basics of the logic of trading and its price principles, which are the raw materials to create any method, system, or strategy that you have encountered in books, courses, or YouTube, your trading will go to a different level and will stop being limited due to the popular ideologies from different characters that call themselves experts. For example, in this chart, price is at 98.78 today. It's October 31, 2022, and I can say because price is right at the top of the price of this day, I can set the stop loss below the lowest price of the same day, and I will buy. Buying right now based on the highest price and the lowest price of that day, which is at Tuesday, 18th of October, and it gives me a risk of 66 pips, and if I look for a profit at the price 1.000 is 124 pips profit, pretty much a 2-to-1 risk-reward ratio. Now you might ask why I am buying here. Then I can go off explaining my reasoning, my hypothesis, my memories, but at the end there's not a right reason of why, but only the numerical information that I can actually see, which is in fact the same for everybody, like when that day was and what is the size of it, measured in pips, what is the actual price based on that numerical information. At the end of the day, the only thing I can do is managing risk. I decide how much those 66 picks are worth. It could worth $6, $60, $600, $6,000. The most important here is that you are conscious of the loss that you can manage due to the relationship you have with money. There's no way that I can say that what I'm doing is correct, and by thinking I am correct, unconsciously give you feedback as if I really knew what and why it happened, telling you a story. This is why understanding the price principles help you to not only see and make simple decisions based on what you can actually see and not based on what you think you know and believe you see. Because the price principles are the same in all time frames, all type of charts, in all markets and financial instruments. All methods, strategies, or systems you use to make a trading decision are based on these principles. The problem is that the mind will tend to give more value to this if the trade becomes profitable, because the mind wants to discover the meaning and permanence in order to feel safe and accomplished. Because most people think that consistency and profitability comes from knowing about the charts. Consistency does not come from knowing, but from simply trade using more objective and specific numerical information that I do not have to imagine based on all the accumulation of ideas, opinions, myths, and beliefs of other people on YouTube that you have come to believe that you need in order to become profitable. The goal in FX Logos Trading with Logic is that you develop the skill to adapt to price movement and are able to grow small accounts. If you can achieve this, then you can trade larger accounts with no problem. In FX Logos Spanish, most of the traders we teach are in countries outside the US. Therefore, $1,000 or more is a lot of money for a lot of people. So I develop my training so they can multiply small accounts and really find an advantage doing trading to change their life without needing large amounts of money. Now I can sell here. As you simply see, the daily trend is down, but let me then put my stop right above here, because I say there are 3 squares that are next to each other with similar size. We can see how the actual price at the right side is here, and I can call this an order block or whatever you want to call it. At the end of the day, as long as I can determine characteristics, even though are subjective, I can use it and take action. Or I can come closer and select these squares at the beginning of the day, then I sell, and my stop loss will be 28 pips. If this daily down movement continues, I am selling high with respect to those squares. Why am I selling is not important than realizing that I am selling when the price is going up, because a lot of people do the opposite. They sell when the price is falling and buy when the price is rising because they are conditioned to react. But here is just about selling high with a small risk, and then if price falls, I have a small risk than the potential down movement, trying to find the low of yesterday. You don't have to expect price to move too much to the south to make some profit. Once you are in this buy, you can adjust the stop. I can even drag the stop so it is right below this small candle. Now I can screenshot and put it on social media telling you that this great trade I made has a risk reward of 10 to 1. I can brag about my 5 pip stop, making you believe that the reason for this trade was my great analytical knowledge. This is very appealing because appeals to the desire of human nature of doing the least and gaining the most. I could have bought here and sold in another account and wait to see which one is the winner to then brag about my accuracy. But you have to understand that when price can go up or can go down, as I mentioned in previous videos of this series, anything can be used to execute the trade and anything can coincide at one moment. As you can see, one of the accounts I showed already passed the $1,000. I am going to withdraw $1,000 and we'll start over the cycle. Why do we teach how to multiply the accounts and withdraw money? Because as I said, most of the people that follow us in Latin America, $1,000 extra can make significant changes in their lives. Develop the skill to increase a small account, or in other words, becoming a good administrator of little will open the doors to the administration of a lot. In the Bible says, the one who faithfully manages the little he has been given will be promoted and trusted with greater responsibilities. But those who cheat with the little they have been given will not be considered trustworthy to receive more. The power in trading and financial matters is leverage, either in technology or having more time or more money, but you could have all the available trading platforms full with indicators and tools to do trading. You have a lot of spare time to spend lots of hours to watch the markets, and you could have a lot of money to trade. But if with little you can become profitable, you won't be able to become profitable with much. Pay attention how most people accumulate more and more trading information as if the large quantity will make things better. But the reality is the opposite. The much gives them less or even takes away from them. And this makes them obsessed with the much and become unconscious of the simple and little that is objective and useful that can actually give them much. Don't miss the next part of this video because it will change everything you thought about trading. This is a great tool to be able to interact with the price movements from hundreds of months from different years, so you really train how to follow price. In this exercise, I will show you how you can literally use anything to trade. So let's go to November 2013. Let's start with $1,000. Let's use a 15-minute chart. We add the chart and I choose the template that has a proprietary tool of FX logos. We will use 1 minute lot as risk. This tool allows me to see from smaller time frames the numerical information of larger time frames. By using this tool, you will realize that anything can be used as an order block just to enter a trade and follow price, but moreover that you are liberated from thinking that in order to trade and make money you need something special, because thinking that you need something special takes you to this endless pathway of perfection, searching and searching, consuming trading content, and that is not necessary. You simply need to learn how to lose. That is accept and manage risk, having a simple, clear and objective notion of what price on the right side of the chart is doing. One of the advantages of simulation instead of backtesting is that with simulation, just like in sports, you are practicing how to react with understanding of the environment you are dealing with. You are not confirming preconceived ideas or practicing simple decisions. With backtesting, you are trying to confirm an hypothesis. With simulation, you are testing your adapting skills. If I buy at this moment and I say based on this square right here, and I put my stop right below here and I just call it order block, if you don't have experience with that ideology, you will want to know why I do it. And if you have some experience with the ideology, it will make you believe that you have the correct judgment saying that I am wrong and that this is not an order block. You will find dozens and dozens of channels trying to explain correctly what is and what is not an order block, imbalances, etc. And it is nothing more than technical analysis, price action with new names. I took that position based on some squares with two prices from several days ago, but the same can be done with one that is more recent. If I buy at this moment and I just go back a little bit, I can say that I am going to buy because the price is passing above this price from this other square that I can also call an order block. And because price has taken out that fractal that nowadays people call liquidity zones, I buy and manage the trade based on that square. Now I can also say I am going to buy because of this other square that I can call also order block. It is not the best moment to buy because I could wait for retracement, but let's do it. See what happens. Now I can also say I think it's not going to go up but down. So I sell and I put the stop loss here above and the profit here at this low. For example, here I can say I am going to buy just because price is above this square right here and I am going to call it order block. Somebody else can say, no, I am not going to buy because of that order block, but because I consider that this is the best order block. And then somebody else can say, I am going to buy now because price is above this other square that I consider is a better order block. Put the stop below the lowest price of that square and here the profit. I am not going too deep into why the profits like this, but the intention of the video is that you realize that trading is not about finding what is the best way to trade or the correct analysis of any ideology, but the adaptability to the two only price movements that can happen at any moment, up or down. When you have a simple sense of direction, you can use literally anything to follow price. Because remember, any strategy, analysis, methodology, or concept don't fulfill anything, they just coincide. I am not giving you the whys and hows, creating a narrative, but just taking action based on simple information. So you see what happens. Here probably this movement was because of fundamental announcement. Here I can buy because it's understandable that has to recover part of that down movement. Here I also can say that I am going to buy because of this square and I call it order block. You could even put two squares together and use them. Price goes to the opposite direction and then you can sell and put the stop above here and put the profit down here because of this fractal. As time passes and the fractal was not eliminated, understanding manipulation and that this down movement could be just to create sell positions, I can buy using these two squares and I can close the sell positions and stay with the buy. So I know that I don't know, but my risk to test my intuition is not much and the potential is high. As the price goes up, I or somebody else can use these other squares to enter the buy position. So the why, how, and when in reality is not as important as it seems in trading, but having a simple sense of direction and clear plan of equity management. When you train not to know but to do, you become more aware of what happens when you just act and measure risk based on objective information. You really test what happens when you let price do whatever it has to do. How your state of mind can be if you are not worried about being right but about feeling tranquility with the risk you're taking. Imagine all the so-called education and information of trading that you can disregard because you realize that nobody has the correct answer. How will you feel to stop consuming YouTube because you always feel that there is more that you are missing and need to know more about the markets? How much will cost you in terms of time and money to keep consuming trying to find the correct answer to become profitable? Imagine stop consuming finished products such as strategies, methodologies, and systems that are very unlikely to satisfy your complex mind and instead learn how to produce your own methods designed to your own personal reality. Here, maybe another person is going to say, I will buy here because price returned to the top of this block and I will put my stop below that square and I put my profit up here. Price goes lower and another person or me again will try to buy and say that here is an order block right here. As you can see, price has escalated in a slower manner than it dropped, and this is a characteristic of fundamental announcements, recovering a quick and big drop or quick big raise and slowly going back. As you can see with these larger squares is that the daily trend is up, so anyone can say I am going to buy because price is above all this group of squares, and you can call it order blocks if you want, so your brain has a matching meaning and can interact with randomness. Price takes the stop loss, but then price goes above that group of squares again and I try again. Another person can buy because he says that price is above this square and calls it order block. I am not putting the orders in break even or moving the stops as the price goes to the favorable direction. And I am doing it like this so you realize that even without too much precision, you can start to see profitability, simplifying the why, how, and when. Equity management is something very personal that you will adapt to your personal conditions and your own relationship with money. Depending on that relationship, the size and frequency of your positions will vary from somebody else's. It is very personal. This is the reason why for some people it may seem like too many positions and for others not. What matters at the beginning of your trading journey is not fill your mind with a bunch of ideologies and beliefs that coincide with price movement, but detect a simple and objective sense of direction and find ways to adapt at different moments to that movement with the minimum risk. As you can see, with $1,000 account, you don't need to use large lots to make the account grow, but adaptive skills and a mind that is free of restrictive and limiting ideologies that make you feel miserable when you lose because you feel you don't know enough, that you did something wrong, that you are not sufficient. Price returns to the price where the quick and big drop started, and then I can say I am going to sell because of possible stops above that price, and then I call that a square order block. Actually, let's do it with a pending order, sell limit, to get a better risk reward. The stop is taken out, but I can sell again. Notice that we have changed from a buying inclination to a selling inclination. I sell and put the order below this square, and I say this is an order block. Price takes the stop, and now I can change to a buying inclination again, and I buy and set my stop based on this square, and I call it order block, and that's it. Here I close the buy position and change to a selling inclination, and I put my order based on this square. I can even call it with more sophisticated names: order block sniper, fantastic order block, or inspirational block, or tornado block. Here you can see how price starts dropping again, possibly going after all the buy positions accumulated in the previous days. But this also gives us opportunity to rebuy, and I can use, let's say, this square right here and call it order block. Here I am going to use the same square and buy again. When I press this button on the FX Logos tools, these vertical dotted lines allow me to see the weekly trend, which is upward. As the price goes up, I can buy and put my stop loss and entry based on these squares that I can call order block. Here I can buy, or somebody else can buy, because price is above these two squares that I will call tornado block. Remember, this is the potential low of the week. These vertical lines indicate me the beginning of the week. Monday, Tuesday, Wednesday, and Thursday, what potentially will do price if the weekly movement is up. Try to go for all possible positions above at the beginning of the week. As price keeps going up, I can say I will buy, because this is square right here from Monday. I set the stop and put a limit. I could buy at a cheaper price, and I say that this square also from Monday is an order block. I put another buy position, and I say it's because this square is an order block, and I can call it Speedy Gonzalez. Here we can see the week ended, and Friday was not able to take out the high from the week, and we are already at a Tuesday, and price continues moving up. By Wednesday, we see the weekly upward movement continues, but there's a detail I explain in my training of why we pause the buying inclination, and I can start to sell retracements short term. We can start the sells. The stop was taken, and here the daily trend is still upward. I can buy and use this square and name it order block. The reason to wait for selling opportunities too is because price already took the high from previous week, and that is a daily fractal. We're almost at the end of the week, and there's a chance that the high of the week is created. I close the position because potentially the high of the week is created. I attempt some sells. Price goes down, but you can see that the daily trend could not be changed, so I close the sell and continue with the daily movement. I buy, and I am going to place a stop below this square, and yes, you know it, I call it order block Picasso if I want. Oops, Picasso was eliminated. And again, as the week is in an uptrend, I can buy and put the stop below here because of this square here, order block, My favorite party song in Mexico, Sopa de Caracol.
You be pa ti, you be pa me.
I buy here again based on this square, and let's go up. For example, now that price gets closer to the high of the previous week, you could also sell and set the stop based on this square. I can call it order block, whatever. This is going to look familiar to those using smart money concepts where they waste all the up movement to then sell with a really small stop and an expectation of a long movement, which is really appealing because calls to the primitive mindset of doing less to get the most, risking the least and making the most. That is lottery mentality, a hidden gem bias, and the dopamine effect of perfection. I can buy here again, and I use this square right here and call it order block. I call it brick of abundance. As the price goes up, I can add a position based on this square right here. I can buy more and say that this is because this is square right here. It's a small risk and either price will go down or will go up from here. It took the stop, but price goes above again, this is square, and I can enter again. I close the trade. We can see how both daily and weekly trend are upward. There are details like the week is ending, that's why I closed. So here it moved too quick and could not enter the trade, but as you can see, price returns here to this square that you can call order block, although none of us can really tell, but you can buy here and use this other square regardless if you call it order block or not. As you can see by the vertical dotted line, we are starting a new week and price has taken out that high from previous week. Then I can start a short-term sell against the trend, but make sure that when you are against the trend, your risk is lower because as you can see, it keeps going up. Here I can try another sell. It is already Monday, Tuesday. Stop is taken out, but then I can buy with the trend. This indicates more the expansion, and I can call it the square or order block, flash or Scooby-Doo or whatever you want. I know it sounds ridiculous, but this is actually what most people do, naming things that they don't really know. So here are some details that allows me to just, well, I was supposed to sell, but okay, I'm going to sell. And usually if it goes down, it's going to look for the price opening of the whole week, which is in Monday. The trade doesn't work, but actually losses can become information if you change the common perception of trading ideologies. Here I can buy again based on this square that you can call whatever you want. So it is important to have some notion that price is going to fall, but don't commit too much to that and learn how to react objectively and simply to change and adapt. Follow price. If you understand the price principles, you can adapt to the binary and constant movement of price at different moments. Here I will try to sell again, and I can say that this is the order block start of the universe, whatever. When you understand the price principle, you stop seeing the chart based on forms and meaning, but by numerical processes. The simulator tool and the FX logos tool help you to accelerate the understanding of simplicity and adaptability. Reacting in a trained way, how to react to change. What it has taken me years to understand, to our students takes them months and less than a year. The rest is the normal and personal progression of trusting what you're doing. What I want you to understand also is that you don't have to have a perfect analysis or really know what price will do in the future, but only a simple notion of direction and the skill that comes with freedom and simplicity to follow price on the right side of the chart. All forms that your mind can detect on the left side of the chart are subjective. All connections and perfection that you try to add to your analysis are just ideas that exist in your mind and the minds of others that believe the same. If you have a simple notion of the binary price movement, you will be able to adapt, understanding that sometimes you will buy and price will change, but other times it will just continue. So trading is not about guessing correctly, but accepting consciously risk. At the end here, if I sell because of a notion that the daily trend is now downward and that potentially price will go below the starting price of Monday, then I can use any of these squares like this one, and I could call it order block or whatever you want. Here I close the trade and then buy based on this square right here. The notion, or how some people call it, the direction bias, could be based on the daily movement, but also with the 4-hour movement. At the end, whichever I use is not important to set a trade and adapt to the price movement. This is why I can use any of these squares to follow price. When you see the market by the numerical processes that are always there without any ideology, symbol, or subjective indicator, you will develop the capability to adapt when it's more convenient for you, according to your personal reality. You will learn how to adapt trading to your life and not adapt your life to trading. You won't be limited trying to find the next convergence, the correct structure, the correct order block, or the fulfillment of the steps of some popular ideology. Of course, the popular ideologies of trading can give you some profit in exchange of the unrest, disturbance, dependency, compulsion, obsession, unconsciously submitting to external ideas or influences, giving up your individuality. Here I can buy and say it's because these two squares set the stop and the profit, and price continues moving. This is a new wick whose high was not eliminated during the same week, and although in this video I am not talking about the high or low of the month, this week could be. So price might start looking for prices below of the lows of previous days. I can sell, but I do not have to set the stops all the way above the highs, but I can use one of these squares and set the stop and wait what happens. Then the stop is taken out. I can try one more time and set the stop above here based on these two squares. I can call order block King Arthur or whatever. For example, in these movements from fundamental announcements, you don't have to set the stops all the way on the extremes, but you can actually use one of these, for example, these two. Price then we see goes to the opposite direction, but if you have adaptive mentality, you can go down using, for example, these squares. But not only that, but you also will understand when potentially a movement will be larger. New positions can be added, and as you can see, I can do it based on these squares. I am not focusing too much on this video about moving the stops, but this is an example where you can move the stops where the stop of the next trade is. There are other tactics to manage risk that I have not mentioned in this video. What matters, I repeat, is having a simple notion of direction and then follow price, adapting and measuring risk. Like a carpenter or any other technical job, measures and builds. Here in trading, you can also measure based on the numerical information of the chart based on price principles. But The market builds itself, and price on the right side is like the hammer and chisel building in the present, and it does not depend on you. What only depends on you is risk and self-control. This is why you don't have to consume the whole internet trying to find the correct way of trading. Use beliefs and opinions of people as scientific knowledge, or stare at the chart for longer than you should, because even your decisions are based on faith and not by knowledge. Price will do whatever it has to do with or without you. When you understand it this way, this actually gives you freedom from the opinions of somebody else, and that freedom then opens the door for financial freedom. I closed the positions and then I start buying again and use these two squares, and I call them order block, the miracle, whatever. I am going to change the dynamic, and I am going to start entering more frequent. Here I can enter, and as I have been mentioning, use any of these squares. It could be these two, or it could be this one back here. Remember, the problem is not that price will not initiate a move unless I choose correctly. Price will move no matter what I do. But because we live in a system of reward and compensation based on merit, you believe that price moved based on what you selected, making you feel good, and because you feel good, you want to repeat the feeling next time, choosing correctly. But then price does whatever it wants, and you feel all sort of negative emotions. So I sold, and the stop was taken out, but then I can buy based on these squares here. And notice how for these fast and large movements, you don't need to find some sort of structure or recent lows, support or resistance, or any other subjective indicator to just buy and follow price. There are constant opportunities that you miss because the ideas of how price has to move. For example, I am going to buy again. I say that here there are some order blocks, which could be any of these, but let's use this one, order block thunder, let's say. Stop is taken out, but then you can buy again and use this square. I call order block Bad Bunny. Price goes up, I can close the trade and then sell and set the stop above this other square, and I can call it order block Super Mario. Here I sell again and set the stop based on this square right here, and I can call it order block Cinderella. I can sell again and set the stop based on this square, calling it order block The Rock. Here I buy and use this square right here because whatever, and I call it Tom and Jerry order block. Here I close the trade and I sell based on these three squares. I call it order block Little Worm, whatever. Here price we see takes out this low, which is a daily low, and there's a possible reaction to the north. When can you enter? You can enter when the price is above these squares. So I just buy, set the stop below here, and I set the limit here above. Now two things will happen, and that is price will either go up or down. And I could also sell, and I can say, look, here we have these four squares which are very close in size, and this is the reason I sell. If you realize by me saying they are together and are similar in size is just a subjective validation, not necessarily something relevant to increase my favorable probabilities. However, this is the exact language most people use to describe the market and validate things that don't really represent the reason of the price movement, either up or down. Simple opportunities of less risk and more reward is what really trading is about, and not the correct description of subjective validations. Here I close this one and then I buy and I select this square right here. I only have the notion that because price took out a major fractal or daily low, there is a possible daily retracement. All I am doing now is adapting using any of these squares. When you develop the skill to adapt, you stop consuming the thousands of different opinions and beliefs out there and instead concentrate on price at the right side of the chart, which by the way is the same price for everybody at the same time in all time frames. Now it went to the south. I will enter, let's see, well, we put the stop up here based on this square and we call it order block Pink Floyd. I'm going to close and enter buying based on this square. Now it took the stop, but I will buy again because also by understanding manipulation, you are able to understand when potentially institutions want to get all the money from one extreme to return to the other extreme they left before the injection of money. I can re-enter here because these squares over here. Now see how fundamental announcements are only excuses to inject money to move price faster? Understanding numerical processes based on the price principles, time, price, probabilities, and manipulation allows you to be more in tune with the institutional movement by entering the market without the need of a special pattern, indicators, or ideologies. So when institutions inject money, you will have a small risk and a higher potential reward. I can buy using, let's say, these squares right here, and I say they are order blocks. What matters is that you understand the principles upon all systems, methods, and strategies are founded, and then practice simulating in days and months what will take you years and years otherwise. I am not showing you all the visual tools we have because, like in the last video I said, you need to be able to follow price with a clean chart, and then you can use any visual tool to make your analysis easier, faster, and more objective. All the features in this proprietary tool are taught in our advanced training, and in the next videos of this series, I will use some of them to show you how your trading can be more adaptive and simple. With this tool, you don't learn how to think of the market, but how to act based on the binary movement of the market without conceptualizing ideas that nobody knows. The reason you lose is not because the market does not provide constant movement for you to take some portion from it, but because your expectations founded on cognitive biases and beliefs of how the market should provide opportunities for you that are very disconnected from reality. Let's continue. Let's buy here. I set the stop below here, based on this square that I can call order block power. Here I can set a sell, and I can set the stop up here above this square. And if I go to trades, I can close the buy order. Now price has gone lower, and we use this square right here and pretend it's an order block Spider-Man. Remember, we have an advanced training that will help you identify the bad habits and ideas that block you from simplification so you can get rid of them to allow yourself to trade any financial market. It's a final training so you get liberated from ideologies and are able to trade objectively, stopping from trading content consumption, and instead you become a producer of your own methods. Just like several of our students that have taken our training and after many years finally see positive results from trading. Send us a message through WhatsApp if you feel you're ready to take your trading to a different level. The link is below in the description. You can visit our website and subscribe to this channel and activate the bell and leave your comments with the hashtag trading addiction and price principles. In the next video of this series, I will show you that the indicators based on past data, popular tools, and restrictive strategies are not what makes you become profitable, but the understanding of the business with simplification and objectivity using the price principles. Like always I tell you, trade with logos, trade with logic. Until next time.